Welcome, ladies and gentlemen. Let's talk about Aitx versus Kscp Knightscope Inc. Someone wanted me to compare the two, and you guys know me. If we're going to compare two stocks, two companies, we're going to look at the charts. No, I'm obviously joking. We're not going to look at the charts. The charts don't mean anything. Let's look at the financials of both companies, compare them, and let's see where the weaknesses are for Kscp relative to Aitx. And obviously, we got to get to the bottom line. The numbers, the charts don't matter in this case, but in case you wanted to know, Kscp doesn't really get much volume, and it's been tanking since forever, kind of like Aitx does. It just tanks, it just keeps going down. If you look at the long term, it just keeps going down. Same thing for Kscp. They follow one another, it seems. Whatever, it is what it is. Now let's touch on the financials here. Let us look at Aitx's income statement, and let's pull up Knightscope's income statement as well. And there's going to be some interesting things you'll notice and why I believe Aitx is already the superior company. You'll see why. I'm getting cocky here as an Aitx fanatic, but you'll notice if you look at quarter 2 2022 for the total revenue of Aitx, it has increased. Since then, it has increased from 267.48K to 596.98K as of quarter 3 2023. So almost a like no, it's not a triple. It's not a triple. Almost a triple. Almost a little over 2.2x from quarter 2 2022. Now, if we pull up Knightscope, you'll notice this one's in the millions. As of quarter 2 2022, 1.04 million. And as of quarter 3 2023, 3.32 million for a 3x increase in total revenue relative to Aitx. But here, that doesn't mean anything. Here's why it doesn't mean anything. Just don't worry. Like, just you'll see why Aitx is financially the better stock. Cost of goods sold. Cost of goods sold. For those of you who don't know, cost of goods sold shows the amount of money a company spends to produce or manufacture the good they sell. So keep that in mind, just in case you didn't know what cost of goods sold means. Okay, you'll notice Knightscope cost of goods sold is pretty high. Even though they make more revenue than Aitx, you'll notice the cost of goods sold. Quarter 2 2022, total revenue 1.04 million. Cost of goods sold negative 1.77 million. And a lot of that is coming from other cost of goods sold. Let me click on that to show you what that means. Other cost of goods sold, COGS, represent the direct cost of production and or the cost of services rendered, excluding depreciation and amortization, which are incurred in the revenue generation process during the period. So that's almost double the amount. I shouldn't say double, about 70% more cost of goods sold. And that's a lot. That's like selling a hot dog for $1, but it costs you $1.70 to make it. So you're losing 70 cents per dog sold is what it's. I like using the hot dog. I just ate hot dogs actually. They were delicious. Oh, Chicago hot dogs, I love you. But cost of goods sold. I love you, but it made me sick. But that's a whole other thing. Cost of goods sold. That's a near 70%, if not 70%. That's a lot. That is. You can't be selling hot dogs for $1 and it costs you $1.70. And this is just get ready. Quarter 3 2022 for Knightscope, 1.3 million in revenue. Cost of goods sold 2.22 million. So they're still selling hot dogs for $1, and they're losing money on it every single time, and quite a bit of it. Quarter 4 2022, 2.35 million in total revenue. Cost of goods sold negative 3.67. They have not had a quarter. They have not had a quarter. I can keep going on and on, but they have not had a quarter where they've sold a hot dog for $1 and it only cost them 95 cents to make it. So they can make all the revenue in the world. If your cost of goods sold is almost 2x what you make, then it doesn't matter. What good is that? What good is that? Think about it. You open a hot dog stand, cost you $1 to make it. Not $1, $1.50 to make it. You sell it for $1. Are you going to invest in that? Are you going to tell your friend? Let's say your friend is the one running the business. Are you going to tell your friend, hey, I'm totally going to want to invest in this? Like, you're going to look at the numbers and immediately go, why are you selling it for $1? And, and it costs you $1.50 to make. Like, what? That's not that's not a business. That's not good business if you think about that. And I can go on and on. Look, quarter four 2023, 3.01 million in total revenue, cost of goods sold almost 5 million. That is ridiculous. That is a lot. So you look at AITX and it's like the opposite. They have they for every they make money when they sell their goods. They make money. I think this is the exception here. I think there's two exceptions: quarter four 2022 and quarter one 2022. Their total revenue was 385.16K, and their total cost of goods sold negative 387.72K. So that there are some exceptions here, but as of quarter one 2023, their total revenue way more than their cost of goods sold. Way more, especially the most recent quarter. 596.88K in revenue, negative 351.68K in cost of goods sold. Now that's a company you want to invest in. If you're just going off of revenue, if you're just going off of these two numbers, if you're just one of those guys that just looks at the total revenue and how much it cost them to make to sell that good, to produce that good, you would walk away thinking Knightscope can go to, it can go to hell. Because Aitx is looking like the better buy here just off of that alone. You just can't keep selling. Aitx right now is selling it's selling hot dogs for $1.50, and it cost them $1 to make it. So they're making profit on each one, and they get recurring monthly revenue, if I recall. So just on those two alone, just looking at those two, that data, you already know like Aitx is the better stock. Because over the long term, nothing has changed for Knightscope. Over the long term, you would think quarter after quarter, maybe you would start to see the cost of goods sold go down. Maybe they would start selling hot dogs at 95 cents. That way, they make at least $1. I mean, not $1, 5 cents off of each hot dog sold that you sell for $1. But that's not happening. It just, if it keeps up this trend, then we would expect the total revenue to increase. Sure, cool, you have more revenue than AITX, but your cost of goods sold is absolutely atrocious. Okay, let's compare. I don't think we have to compare anything else because they're both not profitable, and I just don't see. I don't see Kscp being profitable with that kind of cost of goods sold. Like I said, you just can't make a hot dog that costs you $1.50 to make and sell it for $1. That's really what it comes down to. AITX, it's on its way to profitability. I think it can achieve it because its cost of goods sold is not absolutely atrocious like Kscp. And we know the person behind, steering the ship, so to speak. We know that he follows through. Yeah, so yeah, I don't think we even have to make this video too long. I think I can keep this short and sweet. I hope. Just those two numbers tells you so much. Total assets to liabilities. Let's just look at that real quick. Total assets to liabilities for Knightscope. You know what's funny? Knightscope actually has the better assets to liabilities here. Let me pull up the annual real quick. Let me pull up the annual for AITX as well. My goodness, is it hot in here? It's 80 degrees today here in Chicago suburbs. I think it's the first one of the few days it's been 80, and I'm just sweating bullets sitting here talking. Okay, so yeah. So here's the one. Here's what's interesting though. AITX on the balance sheet is absolutely atrocious. You look at 2022, 6.3 million in total assets, liabilities 38.14 million. You go to Knightscope, they have more assets than liabilities. Wait, are we comparing the same? Oh no, yeah, 2022. If we look at total assets versus liabilities, 22.08 million in total assets, 29.89 million in total liabilities. Actually, they were pretty much on the same. Yeah, they both have pretty bad total assets to liabilities ratio if you're looking at that. But KSCP has a better ratio because 22 to 29, that's not a big deal. But this is ridiculous right here. 9.28 million versus 30 million. It has almost 3x the liabilities. But they are cleaning up the balance sheet. That's their goal for next year, I believe. So, like, either way, even despite Kscp having the better total assets to liabilities ratio, just on the income statement alone, looking just at the total revenue and cost of goods sold, you would probably rather invest in that hot dog stand that sells hot dogs for $1.50 and it only costs them $1 to make. And that monthly recurring revenue is gonna be sweet, and your friend's gonna tell you, "Yep, we're gonna be rich." Well, as long as the company continues to grow. But yeah, that's I guess the compare. I don't know why I like using hot dogs. Like I don't know, hot dogs is easy. I'll use burgers or pizza next time. But yeah, so in my opinion, just looking at those two numbers, that tells the story. Seriously, you don't even need to look at the charts. Just the total revenue and cost of goods sold tells the story. And like I was saying in my previous video today, competition is good. People can collaborate. People can work together to make the world a better place with the security solutions. And I think there's a future and plenty of market share for everyone, despite whether one company has a horrible balance sheet or one has horrible cost of goods sold. Regardless of whether they're profitable or not, I think there's just enough market share for everyone, and I think everyone wins anyways if the